In times of bull markets and expanding monetary liquidity, Bitcoin's price historically rises. Each new all time high forces people to recognize that Bitcoin didn't die. They look at it again and question their original skepticism. Wait, it's still here. It just made a new all time high. Maybe I don't fully understand it. Maybe it's not a bubble. That realization often pushes them to do research, buy a little Bitcoin, or if they already have money in a brokerage account or manage money for others, they may allocate to a Bitcoin treasury company. Many institutional investors are mandated to buy equity or credit instruments instead of Bitcoin the commodity, so Bitcoin treasury stocks have become a popular vehicle. In these bull markets, new demand comes in, and both Bitcoin and the companies that hold it can rise significantly. But an important way to think about Bitcoin is as long-term savings technology. Almost everyone has no idea what Bitcoin will be worth in 12 months. The same is true for the S&P 500 or real estate. What we can say with more confidence is that the long-term trend for all of these assets is upward, measured in dollars. Why? Because the dollar supply is debased at about 8% per year when measured by M2. So things that are measured in dollars rise over time. Even consumer goods go up. Scarce financial assets go up even more. And Bitcoin, being the scarcest and growing the fastest, has historically compounded at 50% annually. That high compound annual growth rate inevitably results in extreme volatility. Volatility is uncomfortable, but it's the symptom of rapid growth. If you want exposure to an asset with that kind of compound annual growth rate, you must accept the cost of extreme short-term swings. Unless you are a trader, speculator, or have a very clear edge in timing the market, you should probably adopt a longer time horizon and treat Bitcoin as multi-year savings. This is why people say hold Bitcoin for at least 4 years. Bitcoin treasury companies understand this. Michael Saylor frames his strategy as intelligent Bitcoin leverage, where you match a long duration growth asset with long duration, low interest rate debt. The key phrase here is long duration. If we knew what Bitcoin's price would be in 6 to 12 months, we could borrow a lot of money for 6 to 12 months. But we don't. Instead, a Bitcoin treasury company primarily issues a 5+ year convertible note or preferred equity that's not due for 10 years or ever. This avoids the risk of being forced to refinance in the middle of a Bitcoin drawdown, which will always occur. Short-term mismatches between Bitcoin's volatility and debt maturity are dangerous, while long-duration financing lets the strategy align with Bitcoin's long-term compound annual growth rate. So thinking about Bitcoin and Bitcoin treasury companies requires recognizing two things at once. One, Bitcoin is capable of spiking to $5,000 or more in a relatively short period, which means you may not ever want to be out of Bitcoin. And two, it may not happen overnight, and no one has a crystal ball. What matters most is the long time horizon and the patience to let Bitcoin's adoption play out. That perspective is essential for understanding Bitcoin and Bitcoin treasury companies using intelligent leverage. Thanks for watching, everyone, and see you next time.